What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the technicals on what we're seeing on AMC, what we saw today, and some of the longer time frames on where AMC could be headed in the near future. Now, in addition to this, I kind of want to go over some of the things that I want you guys to kind of be ready for tomorrow. Tomorrow's going to be a wild day. We are going to be getting Bullard, Powell, and some jobs data in the morning, so it's going to be another crazy day. We have the Ortex data to go over. That's one of the things that we really need to discuss in this video. Something really weird happened with GameStop's Ortex data, specifically the cost to borrow data today. At one point in the morning, it was showing 260% max cost to borrow, and then all of a sudden it disappeared, so we're going to be taking a look at that. We're going to be taking a look at the max pain as well. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, time is running out for that free trial that we are offering for the premium section of our 1348 Discord. You're going to get access to all alerts on those 400 stocks or 400 plus stocks, over 40 private live streams every single month, the proprietary trading algorithm coming out in the near future. So if you guys are interested in that, make sure you check out that link down below. So AMC closed the day today, $17.34, down 7.17%. Definitely not the day that we wanted to see, but more on that in a little bit. Now, when we look at this economic data calendar, we're going to get initial jobless claims tomorrow at 8:30, along with continuing claims. Then at 12:30 p.m., we are going to see Bullard speak, which is, he typically never has anything good to say about the overall economy. He's very, very hawkish in terms of the policies that he wants to enact. Then we get Powell speaking on the global economy to the IMF at 1 p.m. So those are some things that we need to keep a lookout for going into tomorrow. Now, what we're going to cover right now is the technicals that we're seeing on AMC right now, and a little bit of a problem that we're kind of seeing with the options chain for AMC. And I think this is really hurting us right now. So when we look at the longer term technicals on AMC right now, the 4-hour chart is showing some signs of life. We could end up seeing a breakthrough of this 48 EMA, a cross over this 200 EMA, maybe even a 1348 cross on the 4-hour, but we are crossing down on the MACD right now. So the 4-hour chart is kind of showing that AMC could be bottoming out at these levels, potentially. But when you come over to the daily chart right here, you're seeing that 1348 cross down, the MACD coming down as well, not really close to that 200 EMA. So what we're seeing here is maybe not necessarily a completely bearish chart, but it's definitely not a bullish chart. And here's kind of what I want to bring up. When we take a look over at the options chain for AMC and we take a look at the calls specifically for this week, look at the amount of volume of contracts that was traded at these at-the-money strikes. Now, 19,000 at this 1750, 27,000 at this 18, 20,000 at this 1850. Now, that is good to see a lot of action on these closer to the money strike prices. But at the same time, if the chart is not saying that we're going to be continuing up on AMC in the very, very short term, these call contracts are literally just going to be giving more liquidity to the market makers who are facilitating all of these moves down. Now, when you think about gamma squeezes, the option chain doesn't necessarily have to be set up in terms of like a gamma ramp before a run happens. You could start to see a run, and then you start to see the option chain start to populate. So again, you could see all of this money that was spent on the options today just kind of going into shares. Now, this isn't saying options are bad at all, but there is a time and a place to start getting more call contracts, specifically on AMC. Now, when we come over on some of this Ortex data over here, we have still 100% utilization, which doesn't make a whole lot of sense. As usual, 100.25 million shares estimated to be sold short, 19.45% estimated short interest on this thing. We have 2.38% average cost to borrow and 3.38% max. Now, in addition to this, like we were talking about yesterday, when we look at the average days on loan for all of these shares, you can just see it's on a massive uptrend, meaning that, again, the institutions like the hedge funds are not necessarily taking out a lot of shares on loan to short against AMC right now, but it's more, again, derivative and market maker manipulation that is pushing the share price down, which those calls kind of coming in when there's no real reason to be buying calls or any kind of options on AMC right now, it doesn't really help us in the short term. Now, We also have 131.91 million shares on loan. Again, in order to really see that cost to borrow start to head up, we're going to need to see those shares on loan go up because we're not really close to the all-time high shares on loan yet. Now, when we come over to GameStop over here, there's a couple of things that I want to point out before we kind of start getting into this situation with the cost to borrow that was showing this morning. So the numbers that we're seeing right now is 100% utilization, 20.11% estimated short interest, 12.67 million shares on loan, 5.84% minimum cost to borrow, and 7.5% average, and 8.6% max. So those are the numbers that we're seeing right now. Now, I think a lot of you guys saw this morning. I was pretty excited about it because we have not seen these type of cost to borrow numbers on AMC or GME in a very, very long time in terms of the cost to borrow. So here's the screenshot right here from what Ortex was telling us this morning. There was about 105,000 shares net borrowed on GameStop at this current time. And the average cost to borrow was 246.26%, with the maximum at 260.04%. So when you look at this data right here, Ortex is getting its data from an outside source. So if you see 105,000 shares going out on loan and you see the cost of borrows that are tied to those shares, this should be accurate data. So when we look at what happened a little bit later today, when we saw all of those numbers just kind of flip back to something kind of normal for what we were seeing on GameStop in the past, there is definitely something very, very abnormal going on there. How is it possible that 105,000 or 106,000 shares actually went out on loan with an average cost to borrow with 246%? And then we come over here and all of a sudden it's right back down to 7.5% average and 8.6% max. That doesn't make a whole lot of sense. I'm not really one to kind of call for just blatant manipulation all of the time. But when it really looks like something weird is going on, we kind of have to call it out. I don't believe this is Ortex's fault at all. I would kind of venture and say that this is either the fault of the prime broker who is reporting this data or the person that they're actually sending this data to who's actually collecting the data, and in this case, it's S&P Global. But again, when we think about who's at fault here, it's the same individuals. It's the market makers and the prime brokers all of the time. Now, sometimes it's hedge funds who are kind of strategically selling these shares into the open market to push the price down, but the people who are allowing this to happen, the prime brokers and the market makers who are blatantly naked shorting these stocks, technically legally, all of the time. Now, the last thing that I kind of want to touch on before we conclude this wrap-up video is the max pain for AMC going into the end of this week. So for right now, we're seeing the max pain at $18 a share. So what that is, for those of you guys that don't know by now, it's the price at which the most amount of options are expiring worthless on either side, the calls and the puts, benefiting the market makers and institutions selling options the most. When we look at the closing price of AMC today, right around $17.34, yeah, it's very possible that we're going to kind of hover around that max pain going into the end of the week. It all is really going to hinge on what is going to be said tomorrow throughout the day. With that economic data and what Bullard is going to say and what Powell is going to say. And again, it could go either way. We could start to see Powell start to sound a little bit more dovish. We see the market pop back up, bringing AMC and GME up with it. Or they're going to say some things that the market doesn't like, bring it back down, AMC and GME come with it. But again, with the charts that we're seeing right now, nobody should really be surprised or shocked that we're seeing these stocks start to come down. We need to see that buying pressure come back up, and then we can start to see those big runs to the upside again. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.